Good morning, and welcome to another edition of Macro Now, set to be released every Monday morning. Today is Monday, March 29, 2021. My name is Alexander Turro, Senior Market Strategist here at RJO Futures, where we contextualize the rates of change of growth and inflation, not only here domestically, but globally as well within the context of the prior week. So with that said, we'll start with the global currency market. You had the US dollar index having a counter trend bounce of 0.9% last week as it continues to signal a medium-term overbought within its bearish 90-day trend duration. You have the euro versus the US dollar correcting minus 0.9% last week as it continues to signal bullish on a 90-day trend duration. You have the yen versus the US dollar down another minus 0.7% as it continues to signal bearish on a 90-day trend duration. And then you have the British pound versus the US dollar correcting minus 0.6% last week as it continues to signal bullish on a 90-day trend duration. What's interesting to note, if you take a look at the CFTC positioning report, is that these dollar shorts have capitulated, paving the way now for EM and Europe to lead as we progress through the second quarter here. On the back of this dollar strength, you did have the emerging market MSCI index correct minus 2.2% last week, but in sharp contrast, you did have certain European stocks and countries, in Germany particularly, that was up another 0.9% last week, taking this 3-month gain now to 7.8%. And if you take a look at Italian stocks, those were up another 0.8% last week to now plus 10.2% in the last 3 months alone. Moving along now to rates, you did have the 10-year yield correct minus 4 basis points to 1.68%. That's up now 75 basis points in the last 3 months alone. You did have high yield correct in kind down 12 basis points week over week, which takes us to the other side of rates rising is the long gold, which was now down another minus 0.5% last week to now down minus 8.2% in the last 3 months and down nearly 18% since its cycle high. Which now brings us to the CRB index in commodities. That corrected minus 0.6% last week to now taking its inflation to 13.4% in the last 3 months alone. But what's interesting to note is it did register last week a big higher low within its bullish trend, similarly in corn and in copper. And if you take a look at something like WTI, that corrected by 0.8% last week, taking its now 3-month appreciation now to 25.8%. To note on WTI is the oil volatility. That the OVX is the ticker on that. That failed to get above trend resistance at 48 yesterday. So it alludes to perhaps more of an episodic and non-trending spike in volatility, which takes us to the last point here. You had similarly in the VIX and the volatility index, similarly spike in vol with the front month now registering an 18 in front of it. And if you take a look at the implied volatility, that has now collapsed to a complacent and or capitulatory minus 19% discount versus 30-day realized on Friday, as you had a all-time closing high of 39.74. So today is not the day to chase those highs as we come into month and quarter end. So with that, that's all we have for you today. If you have any questions or would like to follow up, please feel free to reach out to me directly. Otherwise, thank you for listening and keep your head up out there. Thank you.